Hello and welcome to ET. Now you're watching IPO Central, and my guest today is from NephroCare Health Services. It's a company that runs clinics, especially dialysis clinics across the country there. And joining me today is Mr. Vikram Bupala, who is the chairman and managing director of the company, and Prashant Goenka, who is the CFO of the company. Their IPO is opening on December 10th, closes on 12th. Price between 438 to 460 rupees per share. The total size of the IPO is 871 crores, and which includes fresh issue of 353 crores. Mr. Bupala, thank you very much for joining us today. To begin with, sir, give me a sense of your business model. You run a lot of clinics, especially with respect to dialysis and nephrology. Give us a sense of what is the the network that you have, and what is the business model.
Sure. Thanks so much for having me firstly. NephroPlus is not only India's largest dialysis network of clinics, but is also Asia's largest network by volume of patients and treatments that we do. We started 15 years back in Hyderabad with first 2 clinics, and then slowly started expanding in South India and then North and East and West. Today, we run 519 clinics across 5 countries in more than 310 cities. So it's a dialysis network is a very widely distributed network, and it's our true pan-India setup that enables us to give massive scale advantages. The economies of scale kick in, and for the first 11 years we were EBITDA negative, and then we became positive. We just became PAT positive 2 years ago. The operating leverage is now kicking in, and we are fairly profitable at this point. So I think the network of clinics that started 16 years back, step by step, every year we kept on growing. And if you look at our last 3 years of growth, we grew at more than 30% top line growth, and also our corporate EBITDA has grown nicely. Our ROCE profile has grown nicely. It's 24% in the H1 of this fiscal year. So we not only operate in India, we also operate in Philippines, Uzbekistan, Nepal, and we're about to launch in Saudi Arabia. So we are not only India focused, but roughly about 40% of our revenue comes from international geography. So we are a true multinational dialysis network where the global TAM, the total addressable market, is close to $80 billion. So there is a lot of scope for growth, of course, in India, but also in many other select international markets. We have built a very lean platform, the NephroPlus platform in India, which enables us to create significant affordability advantage, significant access advantage, because we go deep into the regions where we provide improved access. So that's the nature of NephroPlus network. It's purely focused on dialysis. I'm sure the viewers are aware that dialysis is a life-sustaining treatment where people with kidney failure need to get this treatment 3 times a week, 4 hours each time. And if the patient does not get dialysis for 7 to 8 days, it causes huge stress on the heart, and they potentially die of cardiac arrest. So it's a very life-sustaining, non-discretionary treatment, very predictable. That's the segment that we are in.
Okay. Mr. Goenka, you are raising 353 crores. Where are you going to use this amount?
The primary proceeds that we are raising will be made up of 3 components. The first component is to grow the clinics in India over the next 2.5 years, which is about 129 crore. We are also raising another 145 crore to pay off our loan and working capital, and the remaining amount is for general corporate purposes.
How much is the debt on the books as of now?
The debt on the book is about 200 crore.
And
but if you account for all the cash and the near cash component that we have, we do not have any debt on the book if you account for the cash and near cash instrument that we have.
Okay. Mr. Bupala, you spoke about the fact that you've been there for 15 years and you became profitable last 2 years. You're again expanding your operations over the next couple of years. You're using this capital for growth as well. What is the normal break even for a clinic which is in nephrology or for dialysis actually?
Yeah, so the break even depends on the scale of the network overall. For NephroPlus, because we have the economies of scale and we have the lean and operational model, our break even happens fairly quickly. When we partner with a private hospital to run the dialysis unit, that's our core model, to partner with private hospitals who already have a dialysis unit in a long-term contract, 10 to 15-year contract. And on day one, there is break even because there is an existing volume. Then the NephroPlus platform kicks in, all the economies of scale kick in, and it's reasonably EBITDA positive on day one. The steady state EBITDA margin kicks in roughly about 3 to 6 months, depending on the clinic. But if you look at a normal non-scale network, it will take roughly 1 to 2 years if somebody opens a brand new dialysis clinic. But NephroPlus platform play is different, very unique in nature.
So you have basically have 50% of your clinic which are captive clinics in that sense, and so is it fair to say that you know, the EBITDA margins will be much higher because those captive clinics only have a revenue share with the respective hospitals?
Yes, I mean, all our models, we operate in 3 models. The first is the captive model, which is partnership with private hospitals. Second is we also work with 4 state governments to run the dialysis clinic inside their public hospitals. The third is we have few standalone outpatient dialysis clinics. The beauty about dialysis is, regardless of the model, we make similar operational EBITDA in each of these 3 models. The starting price point may vary, but at the end of the day, the cost structure modulates and we roughly make decent, similar levels of decent EBITDA margins in all the 3 formats. But our primary format is the captive model, you're right.
Yeah, I just wanted to check, you know, I heard you say that you get 40% of your revenues from international geographies, which basically is around 10% of your entire clinic. So the margins are much higher in international operations for you?
Yes, slightly higher, primarily driven by a much higher price point overall. In India, the price point is roughly $22. In Philippines, the price point is $110. In Uzbekistan, the price point is $55. Saudi Arabia, the price point where we will be launching is $240. So, depending on the much higher price point, our NephroPlus India platform economies of scale kick in and we get higher EBITDA margins and higher ROCEs. That's right.
Mr. Goenka, you know, 23.5% EBITDA margins for the first half. You know, you had 22% in FY25. Is this the normalized margin in this business, or there is, as you know, as Mr. Bupala was saying, that you know the leverage or scale leverage which is coming into play will help to push it much further?
As Vikram mentioned, NephroPlus, we have massive scale across India and international geographies, and we constantly drive economies of scale, we constantly drive innovation in our cost structure, and we have consistently seen a 50 to 100 basis point improvement in the EBITDA margin. And we believe we will continue to see that improvement in the future as well.
Vikram,
yeah, I mean, historically we have, just to add to what Prashant is saying.
Yeah, go ahead.
Yeah, just to add to that point, in the past that you see, we have continuously improved our EBITDA, right? You can see FY23 to 24 to 25 to H1. So that should give you a sense of our continuous improvement engine. And I think the engine is built in a way that will continue to build scale, continue to derive efficiencies as we build further scale.
You know, Prashant spoke about the fact that you're going to use 129 crores for future expansions. Where is this expansion coming in? Is it in India or is it in overseas territory?
So I'll take that question. The 129 crore that we are taking in the primary will be used to expand in India over the next 2.5 years.
And will that be captive in nature, or will it be standalone clinics?
it will be primarily captive in nature.
What is the kind of margins that captive will give you as compared
to this, right? The
I mean to say, what is the kind of margins that?
No, I just wanted to add the point that we are. Go ahead.
I'm saying that what is the kind of margins that you are going to get with respect
please ask the question.
With respect to the captive units as compared to a standalone unit, and which are the big hospital chains that you are tying up with?
Yeah, I will take that question. I think we have not given a split of the margins by the various three segments that NephroPlus operates. But I can say that roughly the margins are similar. If you look at the final amount of margins that we make in a captive versus a partnership with government versus standalone, roughly we make around the same margins. And I think from a overall growth perspective, we will double down on captive, and occasionally we'll do select partnership with governments. And India is still not ready from a standalone network expansion, but we are having conversations with various state governments to recognize, to enable them to get recognized standalone dialysis centers, and that may be the future in the next 5 to 10 years.
Give me a sense of the kind of investment that is required to set up a dialysis clinic, whether it's in captive, or my assumption is that the cost remains the same in that sense for a captive or a standalone. What is the normal cost that you incur to set up a dialysis clinic?
Yeah, so I think as Vikram mentioned, we are India's largest dialysis provider. We operate in three models: captive, the government, and standalone. We have not provided the breakup of the cost at this time in the document, but the unit economics, the capex, it's a capex-light model that we deploy, and we will continue to focus on these three models, and the investment are similar across all the three models.
Vikram, in foreign countries you have this healthcare insurance for the citizens, and that allows you a better realization with respect to dialysis. Are you seeing a similar trend in India where insurance is now being used for dialysis on a increasingly way, because people are now getting more health conscious with respect to having a health insurance policy with them? The government itself has a health policy for its citizens. So is that also helping you in as a tailwind?
Absolutely agree. Both on the government side and the private side, we are seeing significant improvement from a tailwind perspective. If you look from the government perspective, the amount of funds being put in Ayushman Bharat health insurance scheme, if you look at the various state governments which have their own schemes, like the Aragyashri scheme in Telangana, Andhra Pradesh, or Mayojana scheme in Gujarat, various state governments are also investing in health insurance for their population. This is a very positive development for the population of the country, and it's a huge, I think, macro trend that we are seeing over the last 10 years, that the spend is continuously increasing. And on the private side, as we all have realized in the COVID time, that health is a sensitive subject. A lot of people suddenly woke up and said, hey, health insurance is a critical part of planning, just like life insurance. And we are seeing private insurance also growing, albeit the base is quite low in India, but the base is growing at a fast clip, and it will continue to increase. The macro trends are quite positive on both the government side and the private side overall.
I was looking at your revenue profile. Nearly 33% of revenues are coming from government public-private partnership model, which is there. Do you expect this to go up from here on as more state governments come into adopt that insurance model and you expand your footprint domestically?
I mean, we look at each and every project at NephroPlus from a ROCE perspective, as long as the ROCE profile is meets a certain threshold, we approve the project, be it a captive clinic project, be it a partnership with government project, or be it a standalone project. Now, as you can see, roughly 30% is with the government. Both the captive model is increasing, which happens on a regular basis. Year on year, we add roughly about 50-60 clinics, and occasionally we increase the partnership with the government as well. But the ratio roughly would remain the same, plus or minus couple of percentage points. That's a conscious call from our strategic planning perspective, that we want to focus more on the captive, but also if the ROCE profile of the government partnership project is accretive, we will engage with such projects as well. But the ratio would roughly be in the similar lines.
Does this model also allows you to look at a higher end, clinical trial opportunity for many of the pharma companies? Because since you have a wider clinics there, can these be used as for clinical trials of drugs and as well?
Yes, very good question. We have a internal clinical research division called Clinicos, and we have partnered with few large international pharma companies. We have our own internal ethics committee, which has a stringent process of reviewing each and every clinical trial application. And we currently do run clinical trials. For us, it's a way to make impact in the ecosystem by bringing new formulations in a very stringent, organized manner into the diabetes and hypertensive and kidney disease population.
And what percentage of your revenue is now accounting for these clinical trials which are part of it?
We haven't disclosed that in the documentation. It's not a large component of the overall revenue. That's all I can say.
My final question to you is with respect to your international expansion. Is Uzbekistan, Philippines, you're starting off in Saudi Arabia. Are you looking at countries where the unit price for dialysis are much higher and you're looking to set up operations there?
Yeah, I mean, NephroPlus has the ability to provide the best cost-efficient structure in any country that we choose to operate in. It's primarily because of the India platform, right, which we have honed in over the last 15 years. We are continuously evaluating various markets to see if we can create a ROCE accretive impact. While we'll improve the clinical outcomes, it's also very important to focus on the ROCE accretive nature requirement of each and every project that we undertake. And we continuously evaluate these projects depending on the price point, depending on the overall scale of business that we can build in these countries, depending on the repatriation of profits that can happen. These are various factors, the stability of the country and so on. But ultimately, the ROCE accretive nature is extremely important for us to undertake expansion in any country.
Just to get a final understanding of the numbers from Mr. Goenka as well. Mr. Goenka, because you have a captive operations which are there with the hospitals, and then you have the PPP model with government hospital, and then your standalone. How do you account for the revenues coming from these three different in your P&L?
No, as we discussed, we have the three model in India, and then we have Philippines, Uzbekistan. The revenue coming from each of the three models in India as well as Philippines and Uzbekistan is accounted in a single category, which is the dialysis revenue. We do not have any separate segmentation of revenue.
And these are net of revenue share numbers that come in?
No, these are not. So revenue share, any shares paid to the hospital or nephrologist is considered as a cost, and it is taken out as a separate line item.
Okay, understood. It was a pleasure talking to you today. Your IPO is opening on December 10th, closes on 12th. Price between 438 to 460, and it's a 871 crore IPO. which gives a company a market value of little over 4,615 crores. Thank you very much for joining us today on ET Now.
Thank you so much
Thank you
for having us.
Thank you for having us.